Thank you, Mr. Chair. And again, thanks to our panelists today or our witnesses. Commissioner Gerhardt, thanks for being here today. It's great to have someone that's representing Iowa and sharing some of our concerns on the panel today. And I enjoyed your testimony only because it's the same thing that I have heard over and over again as I'm traveling across Iowa. What I don't enjoy about that is the fact that the stories that are being shared by our wonderful Iowa families are stories of hardship and what the ACA has done to their families. And we all have very serious concerns about how our families will be able to continue to afford the Affordable Care Act, those insurance policies. And I hate to say that I agree with you that Iowans and folks across the country have been placed in a situation where they're attempting to decide, do I pay for my mortgage or do I purchase health insurance? And I have heard that time and time again. It's either a mortgage payment because the insurance costs now are so much more than they were previously. Is it a car payment? Is it a truck payment? Is it a tractor payment? I mean, there are so many considerations that families are now making that they didn't have to make a number of years ago. A family of 3 in Kossuth County, Iowa, reached out to my office to share that they are currently paying nearly $8,000 annually for 2 policies, one with a nearly $6,000 deductible and the other with a $2,500 deductible per person. And based on initial rate requests, they received notice that one plan is expected to go up 37%, the other plan 46%, putting them over $10,000 in premiums for next year. And one family member already took a second part-time job off of the farm that barely covers the $8,000 premium expense now. And the family has had very few medical costs so far this year and rightly asked me, why, as healthy participants, do they keep facing these increases? You also mentioned some pretty shocking statistics. We know that Aetna found that 5% of spenders drive 60% of costs. And can you explain a little more in detail what certain federal policies are driving this?
Sure. Well, excuse me. Carriers have to have one individual risk pool for their individual market. And again, if you have a catastrophic claim or a series of them, it drives the whole pool. And so in Iowa, at least, we've had significant claims with one family driving upwards of 10% in one individual pool. And so we had a functioning high-risk pool. And what's happened is, the industry used to true that high-risk pool up to the tune of about $20 million annually. Well, now that chronic spend is put in the backs of 2 insurance carriers. So that pool is driving a lot of the rate. And I heard it in my public hearing on these issues, Senator, where folks were really upset. And to give you an idea, if a family of 5, soon to be 6, if I wanted to buy a plan in Des Moines, Iowa, I think the cheapest plan I'd find with deductibles is probably about $26,000 a year. That's the cheapest silver plan. So it is a cost issue. People have to make significant kitchen table decisions.
Mm-hmm. Absolutely. And we do hear it all the time as I'm out traveling across the state. So thank you for that. As I mentioned, Iowa families are paying a lot for these premiums, and they still have those high deductibles and other out-of-pocket costs. But one thing I hear commonly from folks that reach out to my office and reach out to me is that they didn't realize what their deductible meant when they bought the plan. And others ask why they're paying all this money in premiums when they'll likely never reach the deductible. And I understand that, lower premiums on the front end generally will mean higher out-of-pocket expenses and costs when accessing services. But can we help consumers look beyond the price and focus on the benefits and network associated with the plans in this high premium environment? Is there a way we can do that?
It's difficult, to be honest, and we've done a lot of consumer education around the deductible issue, because I would submit to you $13,000 for the average Iowa family is really not having insurance. They don't have $13,000 in their checking account to write that check if they actually use it. And so it's a really difficult issue. We tell folks to shop around, and some counties, there's only one option, so there's really not a lot of choice, to be honest with you. The plans that are out there are more narrow in network. Those might be cheaper. We have some new joint ventures that are kind of like an accountable care organization. So putting some of the risk in the provider community, I think, makes some sense, where the doctors have some skin in the game to keep the patient well. But again, we got to look at prescription drugs, cost, transparency. Insurance was fixed, through the Obamacare, and now a carrier has to pay out 80% or more, depending on what group they're in. But we didn't look at the actual cost. And I think until we look at the entire system of health care, I think we're going to be having this dialogue for a long time.
Yes, and I know I've shared this story with you, too, about a young beginning farmer that really, his plan was canceled, a $300 plan, which was perfectly acceptable to him. It was canceled. It didn't meet the requirements of the Affordable Care Act. It was replaced with a plan. The cheapest he could find was $700, so a $400 difference every month, which he was very angry about because that was his truck payment there, and his deductible was $10,000. And he said, I don't have $10,000. If something should happen, I don't have it. So it's hurting our families. It's hurting those that are just starting out in the workforce, especially if they are self-employed. And it targets many of our farmers and ranchers across the state. So it's been very, very difficult for us. We could go on and on. I know you had mentioned a solution for the high-risk pool. You mentioned the particular family that's had about $12 million of costs, which is a significant concern. Can you explain a little bit more about what that risk pool, your solution to that risk pool would be?
Yeah. My idea would be, if we give like Commissioner Kryler, giving the carriers predictability of pricing is critical. And if a carrier, with no lifetime limits, no annual limits, you get a catastrophic claim like that, Senator, and your whole balance sheet could be disrupted, certainly if you're a small regional carrier. So, what our theory is if those folks went into some other pool, whether state-backed or federal-backed, where their coverage would still continue in some fashion, they still pay the premiums. And if you told the carriers, you could almost pick a number, say you have to pay the first million, or it doesn't almost matter what the number is, but you're on the hook for $500,000, $1 million. After that, it goes to this other pool that's more of a societal spend. I think that makes a lot of sense, because in smaller states like Iowa, the risk pool is just not that big. So you get a catastrophic claim like that in a pool of 21,000, and that's going to really hurt everybody in that pool. And in our written testimony, we talk a little bit more about how that would work. I'd be happy to explain that further when there's more time.
Wonderful. Thank you very much. Thank you, Mr.
Thank you, Senator.